FXPassion broadcasting you live on YouTube. Happy Monday, everyone. Bringing all together today. Remember, I have a 20 seconds delay on my screen, and also remember that we are in the beginner module. We are learning how to hello. We are learning how to use trend line, support, resistance, pivot points, and we didn't talk about yet candlestick formations. We are trying to build, we are here everyone, strategy and system. So we are trying to build a strategy that makes sense to you, and step by step we are talking about risk management sometimes. And remember, the big one is the psychology part. You need to understand why maybe you know everything and anything about market structure, highs and lows and trends, and you know everything and anything about trade, support, resistance, trend lines, pivot points, and still, hello Silas, hello Miguel, how are you? And still you don't make any pips. You need to understand the psychology part, right? Okay, I need to turn on the platform. Any questions? We're going to bring everything together, so if you have a currency pair, please type in the chat what currency pairs do you want that we talk about, and we are going to bring everything together on the currency pair. Hello George. Remember everyone, you have enough knowledge already to make pips. You don't need Fibonacci, crowns, new trading. You should be able to make consistent pips already. Okay, of course there is a learning curve. Okay, so we're going to bring together, and in 2 weeks we're going to have the trading week again, where we are going to trade and where we are going to show you how to put in practice what we learned, right? Let's wait for the software. NZD-JPY, great. Okay, so what we're going to talk about on NZD-JPY is going to be everything, the structure. Okay, I'm just going to delete the Fibonacci's and the other stuff because we are not there yet. Okay, let's file, workspace, open. Miguel, are you in profit, or do you have a floating loss so far on NZD-JPY? And you are going to see, everyone, by now you should have your platform and your charts like I do. We had a lesson on multiple time frames. Okay, forget the indicators, forget everything. We are not there yet. Okay, so I'm going to delete the indicators, remove all, delete the indicators. And we are going to start from the monthly chart. I'm going to delete the Fibonacci's, we are not there yet. Delete the indicators, not there yet. Delete. Okay, I have some delays on the... I'm out. Okay, great. So what is your bias, Miguel? Why do you want to talk about NZD-JPY? What's your idea? Do you want to go short? Do you want to go long? Let's go, everyone. Bias, long term, down. Bringing all together. The market touched the upper band, it went down, touched the lower band, it went up, touched the upper band. Long-term bias is down. Number one, we are trying to bring all together, all the knowledge. Structure on the monthly chart. We are talking about the market wave when we are talking about the structure. Extension, retracement, extension, retracement, and we are still in the extension. In the meantime, if you have any questions. Okay, now this fall was predictable, everyone. If you're a beginner trader, This fall in here was predictable. Hello Max! Hello Max! How have you been, buddy? Long time no see. We missed your crystal ball. I was out 16 days. You were out 36 days, not 16 days. I thought it's a pair similar to NZD. It offers training possible. Miguel, comparing the currency pairs doesn't work. Okay, there is an expression out there, I don't remember. Correlation. Everybody, correlation between pairs works only in theory. Okay, NZD, JPY and NZD CAD, they are going to move maybe the same as a long-term bias, but they are not going to move the same short-term, so forget about the correlation. Hello Annie, how are you? Eddington is short already. Eddington, where is your stop loss? So bringing all together, structure, now what we need to address are the pivot points. So this is going to be a pivot point area. Transparency, what else? This is going to be a pivot point area, right? Maybe somewhere down here. And what else? We have what? Here the market reacted, right? So we have two pivot points areas. I'm going to delete this one, it's not relevant anymore. And we have support here, which is not that important right now. But the market is going up because it hit the pivot point area, technically speaking at least. Time to shine. Why didn't the second extension go to the 70 point? Time to shine. What do you think, my friend? I disagree with Passion on correlation. No problem, Eddington. You can disagree as much as you want. We told you this already. You don't need to accept everything and anything. Where you started the upward trend line. Yes, time to shine, but why should the market react in here? Great question, time to shine. Great question. We are going to move from the monthly on the weekly first. Listen to me, time to shine, and everybody else, listen to me. If you were long at 70, as time to shine is saying, if you were long at 70, because here the market reacted at 70, you are going to lose every time. You are not going to be consistent. Why? Because you are not trading what you see. If you would trade what you see, you would trade a downtrend. Everyone? Do we agree on that? We don't have the crystal ball. I mean, Max has, okay, no problem. But we, the others, the common human beings, we don't have the crystal ball. But if you said, oh, I'm going to go long at 70, because of this one, right, on the monthly chart, it's a mess, but still okay. On the monthly chart the market reacted, and this is where we had a difficult conversation with a lot of you. This is why we are saying the market is, I don't know the term because I'm not a mathematician, the market is white noise. You cannot predict the market to the pip or to the line, because not always is going to react at the same level. I'm not sure if this was the question, everyone. Okay, because yes, okay, now shine to time is not wrong. We were expecting something to happen in here. That's true. But because it didn't happen, right? The market pushed lower, so we are still down, we are still short on this one. The violet color, yes sir. Eddington stop loss, it's at, let's see, coordinate 7.0196. There you go. Okay, this is Eddington stop loss, but this is the weekly chart, no problem. Okay, now who in here, we are on the weekly chart. To be fair to Eddington, we are on the weekly chart. Who in here thinks that Eddington has the stop in the wrong place? Technically speaking, yeah, your structure, yes. Time to shine, again, the answer is nobody knows when and where the market is going to stop. So if your question is why it didn't stop at 70, the answer is because nobody knows. But it shouldn't. Nobody knows. Maybe yes, maybe not. Pivot points are areas. It's not a line. You cannot measure it to the pip. Okay, time to shine. Did I answer your question? Max says stop loss technically 7.8. It's the correct stop loss. Well, let's see from the monthly chart and structure, right? Now I'm going to delete this one. And Max says, well, the correct stop loss, it would be 78.50. Okay, a little bit, yes. Maybe here, because this is a higher high, okay? Great answer. Now before that, why wasn't your point at 70? Ah, I got you. Like this. Like this. Time to shine, because thank you my friend, I did a mistake, you're right. This is the extension. So I gave you all the lecture for nothing, right? Thank you, time to shine. Now I got your answer. Thank you, yes, this is the correct. Thank you. So, we have structure, we have the stop loss number 1, we have the stop loss number 2. From the weekly, bringing all together, right? I'm going to delete, or at least I'm going to do it like this. There you go. We're going to color code a different structure from the weekly, right? Extension, retracement, it's the same, extension, retracement, extension. Okay, there you go. So this is the structure. We have two different structure, but are in the same areas. Yes, thank you, time to shine. Thank you. I did a mistake. Thank you. Okay. Now, what about the short-term trend? Well, the short-term trend is extension, retracement, extension, retracement, extension, retracement, extension, retracement, extension, right? So, from the monthly standpoint, technically speaking, and from the weekly standpoint, the stop loss, the better stop loss would be here. There is no right or wrong. But simply because the stop loss of Max is above the short-term downtrend and the structure, right? But to be fair to Eddington, we need to address also the smaller time frames. So we are going to go on the daily chart. Need the market to... Okay, so let me see. Okay. Eddington, I don't have a crystal ball, right? Who in here thinks that the market is going to go up? This is the daily chart. And who in here thinks the market is going to go down? Bring in all together, this is the chart. and then why. So you can draw lines, but can you trade? Can you be more specific, Renko? Can you trade? I think yes, but I don't understand. So you can draw lines. Who in here, everyone, thinks that the market on the NZD-JPY is going to go up and take Eddington out? No problem, nobody's perfect, losers are part of the game. And who in here thinks that the market is going to go down? And remember, what we are trying to see, what we are trying to do, what we are trying to see is what the market is telling us, and what we are trying to do is to trade what we see. Retracement for me, okay? Why? Kimin, if you teach, you do not trade. At this moment goes down. Well, you need to analyze the monthly, the weekly, the daily, and your trading time frame before you decide on what to do. Okay, I think down. Okay, great. Short-term count and trend is broken now and gets down. Okay, anybody in here who thinks that is going to go up? This is the long-term uptrend line. This is the medium term. I cannot break, something like this. There you go. Let me see. 40%. Okay. Is anybody in here who thinks that the market is going to push up or higher? So this is one, and if you want the aggressive one, short term, then it broke somewhere in here. I don't know if the platform allows me to. Okay, something like this, not the perfect one. Okay, there is no right or wrong. Let's address. Okay, maybe the market is going to push up, maybe the market is going to push down. I will go long. Thank you, Victor. Why do you think it's going to push higher? Why do you think it's going to push higher? This is the monthly, right? And we have here the pivot point number 1, and we have another pivot point. Where is it? This one, this one. If this is going to be a high, right? So this is from the, this is the upper band again from the monthly. So this is the monthly, this is the daily. Let me see if I can adjust something and duck and do it like this. This is the daily. We are trying to bring all the understanding so far together. On the monthly chart, this is the chart, and on the daily chart, this is the. As you said, we should trade what we see. And what do you see, Victor? We are retracement on higher time frame. Well, it looks like, but we don't have the confirmation yet. The market needs to close or form a low in order to have the confirmation that is going to retrace. So far, okay, it's maybe a retracement, yes, but it's a speculative one, right? Okay, so I agree with you, maybe, but the most interesting is the daily. On the daily, the market is telling us a few things. Victor, why do you think the market is going to push higher? What do you see? You said we need to trade what we see. What do you see? I'm going to do it like this. There is no right or wrong, we are just going to address the technical risk, right? Now, bringing all together, I'm going to give you a help. From the monthly and weekly standpoint, okay, technical risk for the short trades. And remember, you have always some kind of technical risk, okay, black. So, short trade, technical risk, the market hit the pivot point and it didn't react yet. Question mark, we don't know, it's speculation. Okay, so this is the technical risk from the monthly standpoint. And you should check the monthly and the weekly, everyone, before you enter your trade. Oh, but I trade from the 15-minute chart. It doesn't matter. The higher time frame controls the smaller time frame. So, Max, check your crystal ball, man. Short trade, technical risk. The market hit the pivot point and it didn't react yet. So, I don't know what it's going to do, but for sure the market didn't react yet. I don't know, I don't have the crystal ball, but before entering long or short, right, now the market hit the pivot point and didn't react. Now, reasons to enter the short trade is, well, so what are the pros, right? Pros, the cons and the pros. So pros, trade what you see, the market is falling, right? To be fair to everyone, the traders who are going short, the traders who are going long, right? So the market broke the counter trend line on the bigger scale, right? And it's falling right now. And we are here, so long term, no problem. All we agree that long term the market should go down, that the market should fall. The question is short term, right? Because maybe we entered in a wrong day, on the wrong direction, right? So the market is falling long term, yes sir, yes ma'am, but technical risk, the market hit the pivot point area and it didn't react yet. So because the market is pushing up in here, maybe this could be maybe a reaction. And if this is the reaction, and I'm waiting for Max's crystal ball, right? If this is the reaction, then Eddington is going to lose. And me too, and everybody who is short at this point in time, we are going to lose, right? It was 3 times when it touched 70% goes long, because it all losers goes long, wait for reaction. However, it is casino, the way for big money and more quantity of losers. Goes long, mistake, go short. So the market is going to go short. Okay, great. Now on the daily chart we are going to do what? We are going to address the short term, right? The short term. So this is going to be the short term extension, retracement, extension, and then extension, retracement, extension, retracement, extension. There you go. We're going to color code this in orange. Okay. Now this is a fact now from the past. This is not subjective anymore. The market was. We're talking about the market wave right now. How you are going to identify the market wave? You are going to see a change in the short-term trends. So the market was in an extension. Let's color code this like this. Okay. Remember everyone, There is no right or wrong, we are just summing up technical stuff. Okay, so the market was making lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. Broke the counter trend line, was making higher highs, higher lows. Broke the counter trend line and start making lower lows, lower highs, lower lows, lower highs. Broke the counter trend line, and it's in the short term. In the short term, on the smaller scale, high, low, high. The market just did, on this smaller scale, the market just did a higher high. Eddington, do we agree that the market made a higher high on the daily? And everybody who is short, do we agree that the market made a higher high? Again, this doesn't prove anything, everyone. There is no right or wrong. We are just talking about technical stuff. Do we agree that the market made a higher high? Go short without reaction when price will be dropped approximately 6.5. And all things go short, and then we see a reaction. Speech why the crystal ball. Okay, great. Max has a crystal ball and he says go short. Let's put a line on the crystal ball. Go short 6.520. So this is going to be crystal ball, and the coordinates 6.5.20. Great. Okay, great. Why not, right? 6.520. Great. So this is the crystal ball that is predicting the future. Okay. This is for the short traders. What about the long traders? So what is the technical risk from the daily chart, everyone? There is no right or wrong. The market still can push lower and everything. Eddington says yes. Okay. So on the smaller scale for the short trade, technical risk. Number one, market did HH, stands for higher high. Number two, retracement on the MW market wave. For the one who are short, this is your technical risk right now. Maybe tomorrow is going to be a different story, but right now, technical risk, market did a higher high, HH, and you have a retracement on the yellow or on the orange. On the orange, this is the extension, you have a retracement on the MW, stands for market wave. Max, you was told USD CHF go short a long time ago, Max. Yes, long time ago. Yes, but you have only one low and one high. Great answer, Annie. Yes, ma'am. Annie is correct as well. Yes, it's a higher high, but it's a speculative. We are not in an uptrend yet. Annie is correct. We also learned this. How to conform a trend, how to conform an uptrend, how to conform a downtrend. Annie says, well, yes, but you have only one leg. Yes, Annie, you are absolutely correct. 25, right? 25. Relevant highs and lows. 25 and 25. Okay. Now, what else is technical risk? All Forex is speculation. Yes, it's a probability game, sure. Yes, it's a probability game, yes sir. Okay. Don't mix, everyone, long-term bias with short-term trading. It's not the same. Don't mix apples with bananas and oranges. Oh, but it's all fruit. Yes, it is, but you need to address the technical risk from the monthly. Is going to be different from the technical risk from the weekly, and is going to be different from the technical risk from the daily. And when you enter a trade that you have reasonable indications to believe that it's going to go long or short, and you aren't breaking any rules, and if you lose, then it's okay. If you're a beginner trader, you shouldn't have. Eddington is not a beginner trader anymore, everyone. If you're a beginner trader, your stop loss should go up in here. If your stop loss is not up in here, you are breaking the rules that you are learning. Okay? For the one that accept these webinars, right? For the one who accept that I'm your mentor, your teacher, stop loss in here, it's in the bad place. Exactly where the market can hit past resistance. Okay? Technically speaking, this stop loss, it's not okay. Right? It should be up in here somewhere. Time to shine, you cannot calculate probability at all on Forex on past. It is not correct. Yes, Max, you are correct. Past statistics and past behavior is not a guarantee for the future, but you aren't correct where you can calculate probabilities. You can calculate probabilities. We are doing this right now. You can calculate probabilities. Short trade, you have, what reasons do you have to enter a short trade right now? Going long is against the main downtrend. Retracement could be reversing. Yes, this could be a view. The question is what Annie told, how significant is this higher high? This is the key to the trade right now. From the daily chart, maybe we're going to check even the 2-hour time frame, but from the daily standpoint, the question is how important, how relevant is this higher high? Is this just part of a retracement and the market is going to break down, or is this the first leg of a short-term uptrend? Because the market, in order to wave, it must make extensions and retracement, extensions and retracement, and it finished the extension. The higher high is an indication of this. Just structure, it's not that significant at the moment yet. Well, how do you know time to shine? How do you know? If I see the first higher high, okay, I'm not saying that I'm going to go long, but as sure I'm not going to enter a short trade. Okay, this for going short right now is high risk to me. Why is that? Well, the higher time frame is the reason. Why is this? The market, in order to wave, it must make a low in this point in time. It must make a low. We learned this, bringing all together today. From the monthly and from the weekly, this market must make a low. Why is that? It cannot make just low, low, low. It's not going to fall in a straight line. The market needs to wave, and after a low, it must come. It's a must, everybody. It's a 100%. It cannot move other way. Now, one more thing. If this candle closes, let me see the weekly chart. On the weekly it closed already, see? This is the weekly. On the weekly already did a low. What is a low? We have 2 candles on the left and 2 candles on the right. Okay? Now, when it formed a low on the weekly at the pivot point area, this gives, statistically speaking, and there are no guarantees for the statistics for the past behavior, but statistically speaking, we have an 80% chance that this is going to be, I didn't say 100, I said 80% chance this is going to be also a low on the monthly. Max says maybe US draw false previous crystal ball. We need 2 points. Yes sir. It's previous, it's false, that means structure is not broken. Okay, the problem is that we are lying in a monthly pivot point. Yes, we don't know what is going to happen. We need another candlestick to the right that may, yes, but we have an 80% chance that this is going to be the monthly low. Okay, and this is enough. This is an enough bigger chance that I'm not going to go short in here. Okay, and I'm not going to go long either, because as Annie said, we are at 50%. We need to see a higher low. We need to see a higher low from the daily, right? In order to have a 75. So Renko, for right now it's a no trade, Renko. From the daily chart it's a no trade right now. We have too much technical risk. Okay, so no trade. But as always, you can do anything you want, everybody. You can go short, you can go long, but if you enter the trade right now, this is a 50% trade, both sides. We'll start a new retrace, maybe, yes. Okay. So if you are short or long, everyone, independently, if you have profits or losers, maybe it's time to close your trade. Okay, because you are gambling at this point. It's a 50% trade, both sides. And remember, these webinars are not investment or trading advice. Oh, I'm going to close the trade because FXPassion said. No, you need to address, look at your plan. What did you see? Maybe we are seeing different things. I don't have the crystal ball as Max do, you know. Okay, now we are going to move, we're going to open a new tab where we're going to move on the 2-hour chart. Two-hour chart, and then we're going to check USD CHF. 2-hour chart, let's compress the chart. Okay, now there you go. What is this? Retracement, extension maybe? No, I cannot do this. And again, if you cannot see clearly, just go on the bigger time frame, which is the 4-hour chart. And we are trying to see, spatially identify the market wave, right? So on the smaller scale, this was the uptrend. The market broke our uptrend line, and from this point in time, we are going to draw a downtrend line in here, and we are going to check if we need to go back in time even further, if it's going to happen that I'm going to break any wrong chart tells not USD CHF. There is no right or wrong. We're going to check. Okay, so this is the 4-hour chart, and I need to go on the 2-hour chart. This is why I'm out. Congratulations, Miguel. Yes sir, yes sir. Now on the 2-hour chart, let me see if I'm going to break any rules. So extension, retracement, extension, retracement, and let me see, extension until here. Okay, so from the 2-hour chart again, similarly to the daily, we are in a retracement. We are in a retracement from the daily, we are in a retracement from the 2-hour chart. By now you should be able to explain everybody how you identify. Doesn't matter. Well, to the traders that are trading USD CHF, it does matter. Alright? Everybody, we are going to address every currency pair, don't be shy. Okay? So this is the uptrend line. And the market wave, extension, retracement, extension. Great. We are here. We know that there is a pivot point from the monthly in here, so we're going to draw a pivot point, right? And the market is retracing. We have an up retracement, okay? And we learned about what? Past support. This is past support. Okay, this is bringing all together today. Past support. And if the market is going to continue its way up, we don't have the crystal ball, and we have another one, right? This is here, it's another support, past support in here. The market went through 40%, 40%, 40% retrace. Past support, past support, past support, right? Another one in here. So if the market is going to continue, it's going to fall until here, maybe. Why here? Because we have a past support in here from the market wave. So this is the wave. Let's color code the wave. First extension. What? Yellow, great. First extension is going to be yellow, and there you go. Then we have the first retracement, which is in here, violet, and the next extension, which made a higher high on the daily. So, or which one? Okay, green, it could be. So this is knowledge, everyone. Okay, trade what you see. Passion, can I go short on the 2-hour chart? Yes, you can. Just remember that you are in an uptrend. The market is making relevant higher highs, relevant higher lows. Not all highs and lows are relevant. The relevant highs and lows are going to explain market direction and are going to explain the market wave. So if you're shorting the market on the smaller time frame, just be aware that this is a risky trade, because from the daily standpoint we have a higher high, and from the 2-hour standpoint we have an uptrend. We have a long-term uptrend line in here. There you go. The red is the uptrend line. Okay? So Eddington is not wrong if he is shorting the market on the 2-hour chart. Everyone, he is not wrong. Right? Trade what you see, where on the 2-hour chart the market is making lower lows, lower highs. Right? Just address, everyone, that this may be a risky trade because you have past support back, the market it's making relevant higher highs, higher lows, and you have an uptrend line, and you can see the market wave. Do we agree on that, everybody? Is anybody here who says, well, I don't agree, you should be long already? Because we're talking right now. Trade what you see right now. The market is making lower lows, lower highs. So if this is what Eddington sees, he is not wrong. Color, white color. Okay, but remember, most likely it's a risky trade. Is anybody here who do you have a question? Anyone? Any questions? Victor says yes. Any questions? If you are a beginner trader, if you watch the videos, and please put a like if you see values in these teachings, in these webinars, put a like on the YouTube channel. Okay, YouTube is going to push us higher. I don't know. They have a what's the name? They have a program, algorithm. YouTube has algorithm. The more likes, the higher is going to push the stream or something. I don't know. We should make money no matter long or short. Yes, sir. You are correct. Okay, no questions so far. Short if you want. Remember, it's a risky trade. Most likely it's going to push up until it breaks. For the traders who are long, remember, from the daily standpoint, as Annie said, you have only a 50% up structure, uptrend. Okay, from the smaller time frame you have an up wave, and if you're going to go long, your stop loss should go here. This is the most logical place. Your stop loss for the long traders should go here. Let me see. Should go around 6.485. Remember, these webinars are not trading or investment advice. Can you not draw another uptrend line? Yes, you can. This one, the blue one. Time to shine. This one, uptrend line. Yes, you can. Everybody remember the market wave: extension, retracement, extension, retracement, extension, retracement, extension. And we learned all of this. Every time the market changes direction, you are going to have a counter trendline break. You are going to have a counter trendline break on the extension when it's the right time. So you can enter the riskier trades, which are the retracements, because you are going against the general trend. And of course, you are going to have also counter trendline breaks on the retracements. So as you can see, it's not that trading and making pips, it's not that difficult. But you need to learn where to put your stop loss. Because if you put a stop loss inside the ring where the bulls and the bears are fighting for control, most likely you are going to lose. Okay? And again, how are you going to see the difference? You're going to see the change in the short term trends. The market is going to make higher highs, higher lows. When the extension is over, you're going to see lower lows, lower highs. And when the retracement is over, you are going to see higher highs, higher lows. It's not that difficult, everybody. But you need to know where to put the stop loss. Above or below structure. And not this structure. This is already wrong here. The confirmed structure. We had a debate, remember? Why is this not? What is going? I said to you, it was on Friday, right? The easy lessons come on Friday. I said, what confirms the extension? How do you know we are in the extension? What confirms the retracement? How do you know that we are in the retracement? The previous leg confirms the next. So if I'm going to put here the stop loss right now, this is the wrong place. I don't have a confirmation that this is the extension yet. If I put in here, I don't have the confirmation that this is the extension yet, right? So this is the extension, this is the retracement, right? Or do I have it? I have a higher high, right? When the market is going to change directions, make two relevant highs and lows, change directions, then this is going to confirm the end of the extension, not before. Okay, not before. There you go. 4 minutes. USD CHF. 4 minutes. USD CHF. Monthly chart first. Monthly chart. Where are we? We are here with different views. Some of you sees sideways channel, sideways movement with different areas like this one. Some of you are seeing an up long term, very difficult wedge, right? And we are here right now. So this is the higher high, this is the high, the market hit the high, so the long-term bias from the monthly is down. Okay, now if you want to micromanage this, right, you can go from the monthly, you can go on the weekly, right, and see what is happening. So the market is making higher highs, higher lows, higher highs, higher lows, higher highs, and made a lower low, lower high, lower low, right, until the market breaks this higher high. We are still down, short the market, right? This is the bias. Don't confuse the short-term bias. Don't confuse the long-term bias with the short-term trading. We are still short. If the market is going to break the higher high, the relevant one, then we're going to have a 50% up structure, 50% uptrend. But on the smaller scale, as the 2-hour chart, if we're going to compress, trade what you see, trade what you see. This is the 2-hour chart, and again the market wave, extension, retracement, extension, retracement, extension, retracement, right? So the short term is still up. Okay, everybody, our time is up. The lesson for today: when you bring all together, don't confuse the long-term bias with the short-term trading. And before you enter a trade, when you put everything on the chart, some of you have Fibonacci, Ichimoku, the indicators. When you put everything on the chart, you need to address your technical risk. And remember, over and over and over again, if you have all the reasons to enter on the 15-minute chart and on the 2-hour chart and on the daily chart, and you are going to lose, is because you didn't address the monthly chart. Okay everyone, this is FXPassion. What do we say? Stay strong in the markets. So stay strong and trade with passion. This is FXPassion signing off.